Hey, good morning. Today is Wednesday, August 27th. Uh, your latest edition of the Master Pattern Report. Today we're going to talk a little bit about uh, efficiencies and regulations in the marketplace. Sometimes I think that Al Qaeda is running our governmental agencies because we sure are hell bent on self destruction. A classic example was this last Monday. Uh, the program trading is just taking over everything. I mean, there's hardly any volume, and all three markets ended up exactly finishing exactly the same, uh, minus 2%. So you know that that's a function of program trading. And it seems to me that, given the fact that there's no more investment community left, that is that real estate is shot, and the stock market is just acting so erratically that people are becoming more and more disillusioned by this whole fiasco that we're going through. Now more than ever, I think we're going to need some return to regulations that we had in place, such as the uptick rule and regulations on electronic trading. I'm not a big regulations guy, but sometimes we need to have things in place that could assist us in a fair and equitable marketplace. A structure of some sort. Um, and now the regulators have decided, in their infinite wisdom, that we're going to do away with the marketplace for gold and silver and go to electronic trading, and that's going to occur sometime in September, around mid-September. Well, I anticipate that what's going to happen at that point in time is the same thing that happened to oil 12 months ago. They're probably going to drive gold to 1,500 and silver to $40, $50, and run it up and down the flagpole like they did with oil. So you may want to keep an eye out for that. Uh, the third thing relative to regulation is something that I found out just recently, concerning the oil market, was that there's a Swiss company called Vitol that back a month and a half ago held as many as 11%. That's 11% of the oil contracts on the commodities exchange. I don't know how the commodities exchange allowed that to happen, but that just seems like a very hard thing to swallow, and certainly a strong indication of manipulation of the marketplace. What place does Goldman Sachs have in this, by the way? They keep making these predictions that seemingly come true. What is it? What is their involvement with this? Where are they coming from? Who are they connected with? Let's jump over to real estate for a second. I'm really starting to get concerned about the real estate market and the government interference in that market. The things that they're doing are not helping, and the things that they're talking about doing are helping even less. You have situations in cities like, for instance, Cleveland and Buffalo, where houses are being offered for $1, and incredibly, there are no takers. This is of chief concern. I mean, it appears that what's starting to happen now is that it's going beyond the foreclosure fiasco and entering into the area where you and I, who are good creditors and even have no desire to sell at this particular time, are losing value in our homes because of the rapidly declining real estate market. So it's having an impact on people who really are not even involved, and losing a tremendous amount of confidence as well as equity. I still think that what we need is some sort of depreciation tax break with the with ownership, and I think there needs to be a valuation insurance in place that will work very well. As for the stock market, we are looking for major moves today and Friday, Friday the 29th. Keep in mind the one-day rule. And next week we're going to have some interesting discussions on the nature of the stock market as we look for it to move upward before the end of the year. Thanks. Have a good day. And this is Dr. Bob.